that we are tracking is that the Reserve Bank of India's latest bulletin has highlighted that reduced input cost pressures as well as buoyant corporate sales could herald the upturn of India's capex cycle. However, it has warned that there should be no letdown of guard against inflation. So Ritu is here with all of the details. Ritu, take us through the takeaways from this latest bulletin.
Well, first, a disclaimer. The papers in the bulletin reflect the views of the authors and not of RBI as an institution. But that said, these are written by prominent people, which include deputy governors of RBI, and are therefore regarded as important views. So let me start with what the paper says on the state of the economy. It says the near-term growth outlook for India is supported by domestic drivers and waning input cost pressures. Still buoyant corporate sales, turn-up in investments and fixed assets are all heralding the beginning of an upturn in the capex cycle, which it says will contribute to a speeding up of growth momentum for the economy. There's also a study on inflation, which is led by RBI Deputy Governor Michael Patra, which analyzes the CPI trajectory in India post-February and finds that inflation surging above the upper tolerance band of the MPC target was kick-started by a series of supply shocks. But what started as a shock to food and fuel prices got increasingly generalized over the coming months, and a swing in inflation from goods to contact-intensive sectors is generalizing inflation and making it persistent. That said, with CPI still hovering at high levels, there is no letting down of guard by the RBI. Finally, an important and interesting paper that provides some estimates on India's digital economy, which shows that the core digital economy accounted for 8.5% of GVA and the digitally dependent economy around 22% of GVA as of 2019. The digital economy, it finds, grew 2.4 times faster than the Indian economy, and employment estimates, it finds, showed that 4.9 million people were employed in the core digital sector and around 62.4 million people in the digitally disrupted sectors, again highlighting how important digital is becoming to the overall state of economy.
All right, Ritu, thanks a lot for getting us all of the highlights from RBI's latest bulletin. With that, we have to get into another short break, but you don't go anywhere, because on the other side, we're going to track all of the action from the commodity market. Stay tuned for that.